tax exemption for LLCs. Is it possible? And if so, how can it be achieved? This video will explore the complex world of LLC tax exemption, covering both federal and state requirements. Let's start with federal tax exemption. There are several ways an LLC can become exempt from federal taxation. The most common is by filing Form 1023 for exemption under Internal Revenue Code 501(c)(3). Alternatively, if the LLC is a disregarded entity with a sole member that's a 501(c)(3) organization, or if all members are 501(c)(3) organizations, and the LLC is treated as a pass-through entity, it can also qualify for exemption. In 2021, the IRS issued Notice 2021-56, which clarified the standards an LLC must meet to qualify as a tax-exempt organization under Section 501(c)(3). These requirements include operating exclusively for charitable purposes, having only nonprofit members, and including specific provisions in the LLC's organizational documents. For example, the LLC must prohibit the transfer of membership interests to non-tax-exempt entities and ensure that assets are distributed to another tax-exempt entity upon dissolution. However, achieving federal tax-exempt status doesn't automatically exempt an LLC from state-level taxes. Each state has its own requirements for tax exemption. For instance, in California, an LLC must be a title-holding company to be exempt from franchise and income taxes. Some states offer property tax exemptions for LLCs engaged in charitable activities, while others may require separate applications for income or sales tax exemptions. LLCs seeking tax-exempt status face increased scrutiny from the IRS. They must maintain strict operational compliance to avoid jeopardizing their exemption. This includes filing annual Form 990s, managing any unrelated business income, adopting sound governance practices, and maintaining thorough records of charitable activities in compliance with organizational documents. For LLCs that wish to secure tax-exempt status but find the requirements challenging, converting to a nonprofit corporation is an option. This process typically involves reviewing state laws, drafting new articles of incorporation, applying for 501(c)(3) status with the IRS, transferring assets, and notifying stakeholders of the change. In conclusion, while it is possible for an LLC to achieve tax-exempt status, it requires careful planning, strict adherence to IRS and state requirements, and ongoing compliance efforts. Business owners considering this path should consult with legal and tax professionals to navigate the complexities of LLC tax exemption successfully.